Here's two retail apparel stocks that I like going into the second half of 2025. Athletic wear company Lululemon down 48% year to date, and Deckers Outdoor Corporation down nearly 50%. These two premium retail apparel companies have taken tons of market share from their competitors over the last 5 to 7 years, and even if you had bought some of their stock just 5 to 7 years ago, you would have seen 10x returns for both of these bad boys on just 5 to 7 year position holds. But recently, these stocks have had a fall from grace. In fact, they've looked a lot more like this. And unless you live under a rock, you'd know that's likely because of Trump's tariffs. You see, these retailers, they manufacture a lot of their goods in Asian countries, specifically China and Vietnam. And a 10 to 25% levy on these goods, well, that crushes their profit margins by quite a bit. Despite the tariff headwinds, I'm buying these stocks because of their attractive valuations. These companies have traded at historically elevated price to earnings multiples due to their fast revenue growth and their super high demand for their products. With both of these companies resting at nearly a 15 price to earnings ratio, they're trading at about half of what they normally have over the past 5 to 10 years as far as valuation goes. These stocks are very cyclical by nature, meaning that they tend to have slower sales during the cold months, and then when the spring and summer hits, their sales rocket up. This is especially true for Deckers, where they sell Hoka running shoes that make up a huge amount of their revenue per quarter. And as you can see, even in their recent weaker quarter, they reported a 36% surprise on EPS and a 7% surprise on revenue, showing that the growth is not slowing yet. Now, tariff impacts and slower consumer spending are what the bears are afraid of for these two companies, but I think that the Q2 and Q3 earnings are going to be a lot better than people are expecting. And so far, we haven't seen any meaningful slowdown in consumer spending despite the tariff increases. Now, Lululemon is currently a falling knife, meaning it's breaking all of its moving averages and major support levels. As for analyst opinions on this stock, Lulu also has mixed opinions, with some analysts saying hold or avoid altogether, while others think it's a great price to get in. I plan to scale into these two companies on further weakness. Let me know your guys' thoughts on the retail apparel sector and if it's a big stay away or if you guys are buying the fear.